Welcome, everyone. I should wish you all happy holidays. We are in December. That's my favorite season of the year. It's getting very cold in Europe right now. Welcome, Versan. Welcome, David. How are you, gentlemen, doing today?
Terrific.
Very well.
Very well. Okay, I'm glad to hear that. I hope the audience is doing well. Let us know in the comments where you are based. Also, you're going to help us with the algorithm, so the live's going to be delivered for more people. And we do have a lot of topics that we want to cover today. I know that every time I have said we were trying to keep it within 45 minutes because last week there was some, I don't remember what was the reason. I was in a rush. We ended up doing it in more than 1 hour. So let's see what happens today. I do have to catch a plane in like 2.5 hours. So I'm going to do my best here. Let me just check the bullet points that Versan told me. So I think we should get started with how macro environment is affecting the crypto markets right now. I did see some news today afternoon briefly that crypto has effectively decoupled from the stock market, from the S&P 500 for the first time in like 4 or 5 years. So it has been the first week that BTC was not mirroring the movements on the stock market. How do you guys see this? And let me know also what your opinion, David and Versan. I don't know who wants to get started.
David, please go ahead.
Well, I appreciate that. And guys, Merry Christmas. Hope you all are going to have a very excellent, happy new year. I think it is going to be a happy new year for all of us because I do really believe right now we're in an environment where quantitative, whether they want to call it quantitative easing or not, it's really going to ramp up big time. In the United States, Treasury Department has just bought the largest buyback of its own debt in history. I think it's somewhere in the neighborhood of like $18 billion at one time. And that has never really happened to the degree it's happening now. And of course, we know interest rates are dropping in the West, while of course they're increasing, with Japan. And, you got that whole carry trade. I don't think that has had a tremendous impact on the broader markets because they only raised it by 25 basis points. I think that was pretty much baked in. I think the real tell of where things are going is watching the gold and silver market and seeing gold at like over $4,400, 4,400, and I think it was $80. Versan can correct me if I'm wrong, but I mean that is a massive move. And look at silver. Silver is just really doing tremendously well. And here we have an environment where you're watching equities seemingly, new all-time highs for a lot of various equities in the Russell, the Dow, the NASDAQ, S&P. But at the same time, you're watching these, secure tier one assets like gold, also make some amazing new all-time highs. And so that tells you that there is something going on in the mix because that is normally not the case. Usually you're watching equities fly, you're watching gold and that price kind of go down because, risk on assets, right? With equity, risk on assets. They're not looking for the security hedges that you find in gold and silver. But it's interesting when you peel back the onion, you find out, well, who's buying the equities and who's buying the gold and silver? And I think it's a big tell. So in gold, central banks are just piling it on like at insane rates. What is holding up the equity market is really, I think, 7 or 8 different tech companies. And you are seeing a disconnect, with the equities and this digital asset space. We've recently watched a lot of these XRP ETFs come out. And presently, in the short time that they've been out, which is about 4 to 8 weeks, somewhere in that neighborhood, over $1 billion has flowed into these XRP ETFs. And of course, they're out buying, OTC, dark pools and whatever, and they've, building up their positions. I do believe in the new year, we could see a real big short squeeze because the amount of supply that will be available, for some of these assets like XRP, I think is going to get dwindled down very, very quickly. And something very interesting to note. I remember watching this presentation by Larry Fink where he was talking about this digital asset space operating in a similar capacity, as a hedge, against a failing equities market because money is going to move. it's going to move where it sees the greatest level of security in an environment like that. And so it just seems very, very odd what's happening. But I do believe these macro environments are having an impact. And I think that the first quarter of 2026 is promising. At least that's my feeling on it.
Excellent take. I think it's important to recap just everything that's happening around the world, everything we're talking about. It's not market volatility or really geopolitical noise. It's just a lot of tensions that you see around the world. And it's very clear that we are in this historical inflection point where macro and micro analysis, technological forces, blockchain, it's all converging, and it's creating this massive fundamental shift in how value is stored, how value is moved, how we transact across the globe. And I think into 2026, a lot of this is going to become very visible. Also important to note that we do see a lot of financial institutions quietly behind the scenes running into real resources, commodities. And I think it's also a geopolitical lever. And you could take Venezuela for an example of that. But I thought it was very interesting what Edo said about how you said Bitcoin and just crypto overall is decoupling from the stock market, right? Essentially what that means is you're having a decoupling of an entire new asset class that no longer relies on debt or fiat-based instruments. And that's where it gets very interesting, because if you look a bit closely at this and how the entire ecosystem is evolving, I think when real world commodities, that's gold, silver, platinum, other assets, oil too, when you combine that with blockchain, the utility eventually with regulation is going to become independent of debt-based pricing mechanisms. And that's when the whole game is, it changes the dynamics of the conversation entirely. So I'm trying to think a little bit bigger about this, and going into 2026, I think a lot of this is going to become very clear. And if I'm not mistaken, the Clarity Act, you're going to have clarity in January sometime. So we'll see how that plays out.
I'm with you, Bersan. Sorry, I was trying to open an article here, but I did have some issues. I need to subscribe to their bullshit, so I couldn't open the article. But I think what we are seeing right now is, we all know that central banks have been accumulating large sums of gold. And by the way, I want later, Bersan, you to make some comments about platinum. We spoke here on the Turning Point, and I went to see the price yesterday, and I was in shock. It has went up like 50% in the last 4 months. It's like performing better than most cryptocurrencies, which is surprisingly. So this really shows us that, coming back to what David said about the carry trade, the Fed needs to find buyers, because Japan right now is not going to be buying US treasuries anymore. So what happens next? I think the only solution they have is, of course, to turn on the printing machines, and that means that fiat currencies are going to continuously get devaluated. So you really want to find assets that are going to outrun inflation, and that's exactly what we have been saying here on the show all this time, to get some silver, golds, digital assets that are tied to the utility market. I truly believe at this point, it's absolutely unacceptable that someone to be holding meme coins or something that has no utility. The Clarity Act is really putting things in place, and right now, I even used this in the title of my live streaming today, that XRP is being treated as a commodity. XRP is being treated as gold. I don't think that's a coincidence. And of course, we have spoken massively about the intersection between XRP and gold. Now, I don't really know if XRP is going to be backed by gold, but I am 100% sure there will be a correlation. We have explained this in the previous episode in details, how the CTFC actually ruled XRP as a commodity. And with the Clarity Act, literally reshaping the definition of digital assets, they really explain exactly what it means to be a utility token. So it means that there will be a vast majority of digital assets that, of course, are not going to fall for the category of utility coins, and that means that those assets will simply fall out of jurisdiction. Now, what do you think is going to happen to likely 99% of the crypto market? So I truly believe right now the window of opportunity is closing. I truly believe you should position yourself ahead of the game. It's time. It's not a financial advice, but if you hold cryptocurrencies that have no intrinsic value, I think there is a huge chance these assets will never recover, especially right now when you understand crypto cycles are not functioning in the same way as it used in the past. I'm not saying the cycles are completely over, but once you understand that people have less money, so that also translates for less capital on the crypto markets. You have less order books, you have less active participants. If you go to Google right now, the search for BTC is at almost near all-time lows, even despite the fact that the price is still high. We are still like close to $90,000. Of course, not close to the all-time high, but historically talking, it's a high price for BTC. So with less liquidity in the markets, that means that your favorite meme coin will never recover. Not only meme coins, but assets, for example, that are built on ERC20 ecosystem. Anything that has no intrinsic value, I don't think there will be any future for those assets. So it's the time to position yourself in crypto assets that have intrinsic value, that are going to be playing side by side with financial institutions, just like Stellar, Ripple, SHX, and a few other players.
Few things to note real quick. What you see happening in precious metals is a signal, right? It's a signal for urgency. Gold is really the all-time high of gold was actually 44.85. All right. So everyone keeps saying it broke 400, but still very close. The fact that it's breaking new all-time highs, that's a signal. Okay. It's anticipating a lot of money printing coming into 2026, something we talked about last week. There is no other alternative. It's the QE policy that you say is really theatrics. It's the Treasury who's making all the calls behind the scenes. And there's actually a merging between the central banks and the Treasury Department, and you have a massive consolidation phase happening behind the scenes. So regardless, this new framework that we've talked about for many years in this ecosystem is certainly going to have an intersection between commodities and digital infrastructure. That's what blockchain does. It opens up the door to allow this to become a reality. Okay. Anything is possible, really. It's all about the governance behind the technology. Now, even silver is experiencing a massive breakout, and it's breaking I think a 75-year trend. You're seeing, you're going to see major historic rallies. Platinum also, it's very overlooked. I was told by Rick Rule to get in. That's when I shouted out here on this platform saying Rick Rule shared that insight with me. He was correct. It did shoot up. And if you look at the historical data, platinum has actually outperformed gold. So I'm just saying it has a lot of leg room to run. And again, looking at the broader ecosystem of what's happening in the world, there's a pattern that we're seeing from every historical reset around the financial system. And that's simply when confidence in the debt-based systems or fiat currencies begins to fail. And we're already seeing the cracks. Capital is going to flee into tangible stores of value. And right now, this is the phase that we're entering. So it's still early. Don't ever think like, hey, is the gold price too high? Look at how weak your currencies are. And I think, finally, in this environment, investors that truly understand the intersection of the monetary value, monetary metals, and the digital currencies, they're really going to be the ones positioning themselves at the forefront for 2026 and beyond. Gold and silver are going to be some sort of foundation as monetary instruments. They have been historically, and that's where you're going to see scarcity and long-term intrinsic value play together. I think XRP and XLM are going to provide some operational layer, and that's a whole different discussion because we're talking about bridging the physical world with the digital world. Now, once we're in the digital world, you're going to need some P2P mechanism for in that infrastructure. Yeah, and I do believe that's XLM. So there is, again, this complementary relationship. If you know what you're doing and positioning yourself accordingly, you need to have real tangible assets. Then you want to have some skin in the game as far as the exposure to the digital layers that are already integrated into the system. So, I mean, I can go on.
No, it's good. I think it's good.
Speak.
So, yeah. Sorry, I was checking my message. Versanio gave me a call on the 21st of September to get a look in the platinum situation, and it was trading at $1,300, and right now it's above $2,000. And we are talking from 22nd of September to now, it's just a couple of months. So it's really, really moving very strong.
It was a good trade. It was a good
Yep.
trade. And this is, in my opinion, it has a lot of leg room to run.
Well, I think you're right. I want to share my screen if I can do that, guys. And I want to give some support to what you're saying. And this is a very powerful thing to consider. And so what I'm going to do here, I'm just going to share this. Now, hopefully you guys can see. Can you see my screen? Or
I'll bring, yeah.
You might have to zoom in. You might have to zoom in a bit. But
yeah, I can. Yeah, I can zoom in. This is actually, this is the Treasury Department, and I want you to see something here, and I want you to just pay attention to some of these dates. So these are buybacks. These are buybacks, and look at what they're saying on November the 25th: liquidity support. December 4th, liquidity support. December 17th, liquidity support. December 18th, liquidity support. December 23rd, liquidity support. Now, if you want to see what they're talking about in dollars, check this out. This is direct from the Treasury Department, and they are buying back maximum par amount to be redeemed in this one right here, 500 million, $500 million. Now, ask yourself a question, guys, and I'll just stop sharing that. How is the Treasury Department buying back all this money and debt? It's quantitative easing. The Treasury Department is getting its money from the Federal Reserve, guys. This is information that is readily available, and they're doing it for liquidity support. So that tells you right there, we are in a liquidity crisis. And when there is a liquidity crisis, and they're going to throw as much money as they can into the market in order to balance that liquidity out. Well, obviously, they're going to increase the monetary supply, which decreases the monetary value. And this is where you watch commodities like gold, silver, platinum, oil, everything measured against the dollar is going to rise. Why? Well, because there's more dollars in the space, right? And the purchasing power of the dollar is being crushed. And you are watching it happen week after week after week. And it is insane. But most people don't even realize, don't even look to see what's available. The PDFs where they literally are telling you what they're doing. And it just backs up everything that you just said, Versan, because we are going to see an increase. And get this, it is going to translate into this digital asset space, primarily because we are measuring it against the same measurement criteria, the dollar. And it's the utility and the value that is going to be phenomenal. Now, I want to share one other thing to reinforce that statement right there. And this is it here. So here's where we're talking about, senators confirming Clarity Act January markup. Now, why is the Clarity Act so vitally important to this space? Because we've all heard, we got the Genius Act and all this. This determines in a big way who's going to have jurisdiction over these assets, right? The SEC or the CFTC. But at the same time, it's going to define these assets for institutions that have fiduciary responsibility and can't just go out there and directly, start investing. But once this whole thing is done, the floodgates are open. We're not just talking inflows to ETFs, which exchange traded funds, which are ETPs, exchange traded products, and have clarity. And of course, institutions can get into those. We're going to talk about direct investment and get this, utilizing these assets as collateral in the derivatives market. This is a fact. It's happening. It is going to send the price of these things ridiculously high. The reason I believe that, when you're talking derivatives, those assets have to be extremely secure. They have to be tier one assets, like tier one assets, and they have to have very quick liquidity. And XRP has already gotten preliminary approval to be used as collateral in the derivatives markets. Think about that. And also, I'll just stop sharing that. Think about this as well. The Office of the Comptroller of the Currency, and I brought this out on my own channel, but it's important to say, they just granted banks to custody digital assets for the purpose of paying the fees on the networks. Well, why would they do that if they're not going to use the networks, guys? Why would there be any fees to pay? I mean, they're telling us everything that we need to know as far as I'm concerned.
No, I agree with you. Can I make another important point? When you started talking about, when you showed that chart of, the Fed and talking about liquidity over there.
Yeah, the Treasury Department. Yeah, the Treasury Department.
Right, the Treasury Department. Sorry. But that again boils down to what's happening in the traditional monetary system, because when people look at the dollar, they don't think about dollar liquidity. And that's another thing that doesn't really get reported on much, but it's the fact that dollar liquidity is plunging, which means essentially that there's not enough money in the system for the government to even finance itself. So no matter how much they print, we already know the debt is out of control, but that does create all these other systemic issues into the larger geopolitical landscape. And that's really the most critical aspect here is dollar liquidity when you start to look at these currency cycles. And if we bridge it now to what Ripple has been doing, RippleNet, their on-demand liquidity, what do? They solve this problem by using XRP as a neutral bridge asset. So instead of holding those pre-funded accounts around the world in dollars, as dollar liquidity is plunging, you have an alternative solution. Because the bank then can convert its local currency into XRP and send it across the ledger in seconds and convert it into that destination. So again, no pre-funding, that's real-time money, no middlemen, no exposure to counterparty risk, which is dollar volatility, et cetera, et cetera. So to your point, the Clarity Act, that's the real turning point, no pun intended, in the US digital asset regulatory environment ecosystem for XRP, because this is going to distinguish, like we talked about last week, strategic assets from securities. And I think, again, Ripple and Stellar are at the forefront of all this. Their legislation is really going to be a liberation mechanism, you can say, because under the framework, I know for a fact also, and I'm trying to understand this a bit better, but if XRP wants to be treated as a global reserve asset, we talked about this last week, how they have to keep some of their XRP holdings below a specific percentage so they don't trigger the securities classification, right? We did say that's one of the key drivers for global scalability for XRP. So it's going to be very interesting to see how this plays out. But I think once Ripple's holdings does fall under the Clarity Act's compliance threshold, that's when institutional adoption essentially is going to greenlight the whole process and potentially create that supply shock people keep talking about. There's just so many other mechanisms how this could unfold, or the convergence of all of it at once.
And I agree with that. I think the convergence of all of it at once, because it's going to be in the application of all of these digital assets, and it's there. We know it's the utility piece, but they've got all that infrastructure in place. They just haven't, the rails are there, the stations are there, everything is there. They just haven't sent the train fully down the track, but it's about ready. It's at the station, it's loading up. What really boggles my mind a lot is just how few people are genuinely aware of the significance of the change and how impactful that is genuinely going to be. It's going to change the infrastructure of the entire global economy. And we know that they are from a legislative point of view for sure, but the institutional side of it, all of the rails, the DTCC, Depository Trust and Clearing Corp, the major the major investment houses, all of the various markets, and you've got the proponents like Larry Fink, and we know he's going out talking about the tokenization of everything and making that a big deal. The reality is that when that happens, it will happen very, very quickly. And I don't really believe that we're talking years here now. I think we're really talking months before we see this kind of implementation. And something to think about that I've thrown out a few times before on my own show, but here we're using a measurement criteria to value an asset and an asset class that we believe is literally going to replace the very measurement criteria that we're using to value it. That, I think, is going to be a big flip of the switch moment when that happens, because these things are monetary instruments in and of themselves. Stores
Agreed.
of value, units of account, medium of exchange. I think we're going into a new environment where we'll see agnostic transferability between different, whether you call them, whether they be digital, fiat currencies, CBDCs, or whatever. And that's going to change. And the reality that in XLM, I think, as you mentioned earlier, Versan, really is aiming to democratize this space, banking the unbanked, literally setting up an infrastructure for everyday people to utilize it as a medium of exchange. And this is where I think you'll literally see XRP at one, a digital gold perhaps, and XLM as a digital silver, because it's just the way in which the infrastructure. And think about this too. Last comment I'll make on this piece. Under the ISO 222 messaging standard, which we've all talked about at length, over the last few years, remember that Ripple and Stellar were the only two companies that were actually sitting on the board of that messaging standard, in how it was being crafted. Isn't that quite amazing? I think these are dots that people are failing to connect and really realize the impacts of what's coming.
You're 100 spot on. Edo, I want to hear your points. I don't want to hijack the conversation. I have so much I want to unpack with you over there.
Oh, we have a lot to unpack. I think the three of us. I loved, David, how you brought to the conversation the derivatives markets. I think only in the United States alone, that market is worth like trillions of dollars. I think it can even be like 200 or 300 trillion dollars just in America. So you can't really run $1 trillion derivatives market on a low value. So I'm not making XRP price predictions. I'm just pointing out that it can function at a low price. I mean, this is the moment XRP could effectively be removed from the open markets. I think that's definitely possible, perhaps be held in institutional custody. I'm not saying XRP is going to 100% vanish from the exchanges, but I'm saying that, of course, that will put further pressure on the XRP supply shock that's building under the surface. I truly believe this might be the big trigger for an XRP supply shock and not the ETFs, because contrary to the ETFs, like we have inflows with ETFs, but we also have outflows with ETFs, and that's why it was reaching new all-time highs in terms of ETFs, but it wasn't really affecting the price. Now, when we're talking about derivatives market, that is real demand. That can be a perpetual demand for an asset like XRP, because every time an asset becomes fundamental to the derivatives markets, this price has to follow. It can't be functioning at $2. The same has happened when XRP was actually listed on major cryptocurrency exchanges in the past. We had that huge spikes back in 2017, 18, when XRP, I think there was a day that XRP even went up like 300% in the same day. So it's also something that we have to be prepared in the future. We might have extreme volatility. I think you have to be prepared to see XRP perhaps do a 200% in the same day and a 50 or 60% correction. And that brings me to another topic that I want to discuss with you, which is the time that financial institutions will be effectively communicating with each other utilizing blockchain technology. So I'm talking about CBDCs, wholesale CBDCs versus retail CBDC. And I'm going to bring a new concept here to the turning point, and I want to hear your thoughts, David and Versan. And I think it's about the moment we have wholesale CBDC implementation. If that doesn't happen in the same time as we have retail CBDC implementation, there is a systemic risk of people selling their XRP for fiat currencies, because once we have retail CBDC, that means we're going to have a digital version of the US dollars and the euro. So now imagine this. Imagine you have wholesale CBDC implementation and XRP price jumps to 100 or 300%, because of course now XRP is being utilized at an institutional level. Now imagine it might take months for retail CBDC implementation. Now what happens to the people that actually decide to take profits on their XRP, because now XRP has gone up in price and they are now selling XRP for dollars and euros, and then we have wholesale CBDC implementation. A very similar approach has happened in the 30s with the huge financial the Great Depression, and they have frozen bank accounts. Of course, we didn't have digital money, but banks basically decided to close their doors and they disappeared with everyone's money. So millions of people lost their life savings. So I think the concept of not selling XRP, it really has the foundation for me. That's how I see, is about this distinction. If we have wholesale CBDC implementation before retail CBDC, I think a lot of people are going to be falling for the trap, because they're going to be selling their XRP for fiat currencies, and then eventually these fiat currencies can be subject to a frozen of the financial system. Do you guys see this is possible? Do you think I am being too paranoid, or you think this is actually a solid analogy?
I mean, listen, we've covered this on the podcast many times here, including you, Edo, with us. The CBDC, it's real. It's really coming together. You could sugarcoat it all you'd like, and it could be disguised as a stable coin, which we've proven before. It's actually in the Genius Act, if you really look into it. Most people don't read the Genius Act. They just look at the headline about it and say, hey, good for us. We just greenlighted the whole process. This is going to bring institutional adoption. Sure. We've explained that angle too. But you got to factor in the fact that most people out there are not participating in this transition. They are going to be subjects to it. Okay. Whether you call it a universal basic income or a CBDC, the groundwork has been laid out, and I've been reporting this with you guys for many years now. And we get attacked by the Q guys. Keep saying it's not true. Trump is putting the deep state. I remember the bullshit. Okay. I tried my best, and I've been attacked, excluded from documentaries just because I was telling people these are the facts. So it's the truth. There is going to be a lot of people that are going to fall into poverty because of these changes, because they haven't positioned themselves because of bad financial decisions. And it's not their fault necessarily. It's the fact that this beast system is debt-based, and debt-based is slavery. Okay. This goes so deep. So it's going to play out, and they're going to use war as a mechanism to get us there. I've been told that off record many times as well by a lot of the people I've had on the podcast who are, more informed than I am. So I think the digital rails are really a mechanism to lure people in, and the incentive of FOMO, fear of missing out, because of what has transpired with the Bitcoin narrative from the past. I've seen it with my own eyes, including Vendel and I. We were early victims to this in the beginning. We wanted to get in because we saw how much money people were making. There you go. But we decided to take time to do research into it. So I think it's inevitable, because you got to factor in the fact that most people are not going to have wealth. Ninja generation, as they call it. No income, no job, no assets. And that's really where this is going in the grand scheme of things. But we're not allowed to talk about that, because we're going to get attacked by everyone here saying you're doom and gloom. I think the big picture is more important than anything now. And I think most people are still not going to understand this until it's too late, because everybody in this ecosystem, they're chasing yield, which is a joke when you factor in inflation and still realize that your yield that you're earning is denominated in freaking dollars. Okay, so let's be realistic. Speculation, leverage trading, give me a break. They forget to realize that XRP is not meant to be sold. I mean, I hate to say it like this, but I was telling people years ago, before it became normalized, not to sell your XRP. You could leverage it as a bank, because what they don't understand is that when the next liquidity crisis hits, and they're just maintaining it right now, but when it hits and traditional settlement rails are going to freeze, that's exactly what you said right there, the ICE 9 scenario, which is very real too. The system is going to pivot potentially overnight. And that's when the digital rails that already exist and have been regulated, and I guarantee you XRP and XLM are one or two of them, okay? That's when leverage is going to turn into utility, and utility will turn into value. And that's exactly why I've told always people not to sell it. Remember also, we were waiting for the regulatory environment to evolve. So why would you sell the future currency, which we don't know what its classification is just yet? We can speculate it's a digital commodity, how it functions, but we really don't know. It could potentially be a wealth redistribution for the rich, and whoever makes it on board, they survive, I guess. There are many ways to look at this, and it's a very detailed, but I don't even have the right words to describe what I'm seeing in my head. Sometimes I have to take time, and that's why I write these articles. But we'll see how it plays out. I'm sure David has a very interesting take.
Well, I totally agree with you. I do believe they are going to, it will, we've all used the term a flip of the switch moment. Basically, what we're saying is it's going to feel almost instantaneous. It's going to be a night and day result. You are going to wake up to a new reality. And that new reality, remember when the stock market crashed in October 1929 in one day, bang. Well, that was at a time when it was not automated. It was at a time when these were market traders and all this kind of stuff. They did not have the sophistication that they have now. Right now, you have to realize you're watching trades happen thousands of times in a second with a lot of these, algorithmic, mechanisms that are being used to manage these markets. When the whole thing cascades like that, it is going to be happening so lightning fast, and it will be a bloodbath, be assured. And at the same time, this is why I believe you got a big push to tokenize all of this, so that it's a 365 24/7. See, when it's not, they have these stopgaps, right? They can close this down, they can put a stopgap in here and this and that. I think under an environment where you're 365 24/7 like digital assets are, there's no stopgaps. There's no stopping the bleed. And you will see what the WEF has been talking about. By 2030, you'll own nothing, but you're going to be happy because you will just be happy to survive. The reality is, when there is this massive change, and we're seeing all of it, all we're seeing right now are all the cracks in the dam. And at any moment, the whole thing could unwind. We know that that can happen. They've even come out and said so themselves. And when I say they, I'm talking about the International Monetary Fund, Bank of International Settlements, all the central banks. They all can see the systemic risks that are facing the global international economy and how vulnerable and shaky it is. And I just, the cascading effect of that really is so hard to digest. And I think because it is very scary, nobody really wants to address it.
Yep.
But I've oftentimes said, hey, the ones who set the fire are going to be the ones that show up with the hose. They are going to show up with, and people will beg them for the solution being, as we know, a digital system, secure, universal basic income. It is going to be a devaluation of assets, and another reason why a lot of people are going to capitulate is because they're going to have to. They're not going to be in a position to hold on. Whatever assets they have, they're going to have to liquidate in order to survive. If I could, I would say this as an analogy. In the Bible, we have this example of Joseph, who went to Egypt. He became the prime minister of Egypt, and he interpreted the dream of 7 great years and 7 very lean years. And the lean years ate up the 7 good years and still were lean. And this is what happened. People, they came, they used their money to get what they needed to survive. Then they gave their assets for what they needed to survive. Then they gave their land for what they needed to survive. And eventually they gave themselves for what they needed to survive. I think that people they will be squeezed so hard that, yes, a lot of people are going to be forced into a position of capitulation. They're going to use fear, and they do now, fear, uncertainty, and doubt, all the FOMO, all that. But definitely reality is going to hit too. In a collapsing economy like that, think about it. Most bank mortgages, and folks don't realize this, are callable. They can be called. You don't even have to miss one payment, and they can call that mortgage.
Yeah.
And if you have no other lender that's going to step in and refinance it for you, then, hey, you just lost your house.
Yeah.
And that can happen
Crazy.
so fast. It's a cascading effect.
Well, it's happening at all-time highs now, but we've been cooking the books as far as the real economic data. I talk to people every day in the real world, and people are buried in debt. The groceries are so expensive. They're defaulting on their car payments.
I was just going to say defaults are through the roof.
Look at the repos on vehicles right now. They're insane. Okay.
And the unreported mortgage foreclosures.
Right. And this is just the beginning. And forget that also. I have a friend who works at Amazon, a little higher up there. And he told me, Versan, we're about to lay off 30,000 people. Everyone's getting letters in the mail who works at Amazon. So I mean, this is just the beginning, guys. You think it's going to get better? Let's not sugarcoat the truth, because in my opinion, giving people a false reality or an illusion about what's happening in the world right now, it doesn't serve anybody. I wrote an article the other day, which was, it took me a lot of like support behind the scenes from even my wife to say, go tell people what you think, Versan. Don't be afraid, right, of criticism. And I put out this article calling it The Web of Lies. And in this article, I explain in detail, and this kind of ties us into a lot of the stuff we're talking about here, how all these narratives are layered upon each other and people are given different truths. And that's why we're always so divided, right? Because if you could give people different truths of the same story, we'll never reach a consensus. We'll always be divided, while the very power structures that are forcing these narratives are changing the laws. They're laying out the groundwork for their system, for their new wealth preservation mechanisms. And crypto is certainly a part of that. The infrastructure. And that's why I keep reiterating the importance of understanding the real story where it becomes revolutionary in a sense, because blockchain technology, it's people treat it as a speculative tool in this ecosystem. It's very clear. But the true value in blockchain really lies in not just bridging the physical with the digital world for the first time in history, but the fact that you can even tokenize real world assets like gold, like silver, energy, real estate, creating a digital representation that is in the form of a digital token, which is divisible, tradable, and instantly transferable. That changes the whole conversation. The implications are staggering, because the tokenization, to a degree, does help us have some real store of value, but digitally, where you have fractional ownership, meaning that assets that are audited and once reserved for financial institutions can become accessible to anybody else. But that's the mechanism the very powers that be are also using to infiltrate our wealth and really get their hands in everything. So this could go in two different ways, but if I'm going to be honest with you guys, real revolution change doesn't take place on the internet. It takes place in the real world, like what we used to do. This is something Gerald Salente told me off record. He's like, Versan, like, people have become so soft. They don't protest anymore. They don't stand up for what they believe in. They just go and tweet it. And it's not enough, he said.
Yeah.
So
and
there's
I think
an
you're
awakening,
right.
but the awakening needs to be taken to another level too. So I'm just saying we have to be realistic about this stuff.
Yeah.
It's not beating around the bush and sugarcoating the bullshit, because it's not helping anybody.
Yeah. The majority of people have been preconditioned to accept the reality that will be thrust upon them. That is an absolute known fact, and it was part of the plan in the first place. So what you're describing is absolutely, remember when this all went down, guys? How many people acquiesced? How many people acquiesced? And the ones that didn't, hey, they know, they made a list and they checked it twice.
Yeah.
You know, if you want to think the Santa Claus thing. But I agree with you. Look, I'm going to have to split, guys, but I just want to say we have so much time. This is my last thing. I'm going to split. There, what you just described, Versan, and what you've been saying, Edo, what we've been communicating, these things are happening in real time. And I guess we can play the ostrich. We can bury our head. We can say, oh, no, that won't. I remember when all this was going, oh, no, that could never happen. You can't bring the global economy to a screeching halt just like that. Well, they did. And, oh, you can't see. Why would the market have an absolute massive secular bull run when there's no shipping, manufacturing, trading, this and that? Oh, it can happen. The opposite is true. They can contract this just as fast as they blew the balloon up. They can burst it. And don't kid yourself. This is a wealth transfer. And this is a decimation of the middle class. And they want us back to some sort of, digital feudalism. Real world assets, being above water, being aware of what's coming, is probably going to be your only protection. And there is going to be I personally believe there is going to be a great, humongous widening gap between what's wealth and what's poverty. And the majority of people are going to be on the bad end of that equation. I just think that's what's coming.
No, I agree with
Ultimately,
you
that's
entirely.
reality. So, but I want to.
100%.
I know it sounds doom and gloom, but the thing is, here we are talking about an opportunity we are being presented with to not be a part of that equation, where we can have, an opportunity to kind of get out of that. But very, very few people are genuinely listening. Guys, I love you so much, both Edo, Versan. I wish you guys a massive, amazing Christmas holiday, Happy New Year, all that jazz. And the community, you guys are just absolutely fabulous. Stay safe. Too many scammers out there. If your
Likewise.
assets and your XRP was worth nothing, then why are they coming for you? So stay safe. Don't fall for that nonsense. I know myself, I'm not on any of these platforms. I'll never DM you or ask you for anything. So I love you guys. I got to split.
Thank you, David, so much, man.
No, it's fine. Take care, okay?
All right. And we'll keep in touch. We will be in touch, my brothers.
Okay, see ya.
You bet.
Happy holidays, David. I will see you next week.
Yeah, thank you. Bye.
Versana, I will jump into final thoughts because also in literally 7 minutes, my transfer will be down. I am going to Austria for the Christmas with my family. And there is one question on the super chat I will answer quickly this because I know she already sent this multiple times. And the Canton network, I did a brief research on this, and is an institutional network for banks and financial institutions. It's a private network, so you can think this as a private WhatsApp where banks send messages to each other and nobody else can see it. So basically, it's not meant for retail investors. Now, this is a legit network. What I can't really understand is you ask about Canton coin, but as far as my research has gone on this subject, there is not a native coin for this network. It's basically, Base. Base is also a network. Base doesn't have a native token, just like XRP Ledger and XRP, or just like Ethereum with the native token Ethereum. I don't think there is a Canton coin, so you have to be very aware that maybe someone is trying to scam you into buying this Canton coin, telling you it's associated with Canton Network, which is a legit network. It's a private network for banks. Now, I don't really know if there is a private coin or not, so you have to actually do your own research on this. I don't know if you want to add some thoughts about this one, Versan. And finally, yeah.
Mm-hmm. Well, I just want to say.
Yeah, go ahead.
Okay, I'll be quick. I just want to say thank you. But I don't know enough about the Canton network. I did look into it briefly because I did get some inquiries, and I gave people the same answer I gave last week when people kept asking about other digital currencies. I work within a limited framework of what I truly understand. And I understand a lot of these technologies could be complementary to a degree, but if you look at each of these blockchains, they all say they do the same thing. Payments, wire transfers for banks, for financial institutions, everybody's doing the same thing. In my opinion, there's just too many of them. There's too many copycat blockchains. And I'm not saying one's better than the other, but what I know for a fact is that whether they survive or not is a whole different discussion that I'm not ready to have because I don't know. But I know for a fact that the entire financial system that's being engineered or emerging, it's happening through layers of interoperability, layers that are addressing specific niches within the flow of money, liquidity, settlement, and of course, AI, digital IDs, things of that nature. So I think together they can complement each other in many different ways, but it's designed to function really with this, this underlying messaging network. And I still believe at the end of it all is still RippleNet, because that is really the foundation of everything. Everything else seems to be built upon it or complementary to it. And it's the Stellar and Ripple network. So I don't know how it's going to unfold, but I don't think certain assets are competing with each other. I think they're complementary components of the same transformation. So we'll see what happens. And of course, as the gradual replacement of legacy rails becomes clearer and clearer, we're going to see which assets are going to actually operate as infrastructure in real time. So we'll see.
She say, just complementing the answer, she says there is a Canton coin on Kraken, but that doesn't mean it's associated with the Canton network because you know how exchange listings works. You can launch your own cryptocurrency and you can pay like 40 grand and they're going to list you on Kraken. So that doesn't, so in other words, just because a cryptocurrency is listed on an exchange, that doesn't mean it's a legit project, putting it in very simple words. Now, just some final conclusions. If you look back for the previous century, we have, that's not related to the quantum network, but coming back to what David was saying, if we go back in history 100 years ago, we had an average of 150 currency collapses in the 20th century. So what makes you think that won't happen to the euros that you hold on your bank accounts or the dollars? By the way, it's already happening. When you see the purchasing price of the average fiat currencies, take the last 6-7 years, and you will see that it's basically lost 200 or 300% of the purchasing power. Now, I do have to actually turn off because I am late. I hope I will catch my flight, but it was important to get a turning point done. I am happy I was able to make it. Versan, if I lose the flight, I'm going to give you a call. I'm joking.
No. You're not going to lose your flight, but I just want everyone
I'm joking.
Yeah, just thank you all for your support. We love you. And just a quick rundown of the assets that I do hold. I share this on my Patreon in my positioning 3-tier strategy: XRP, XLM, HBAR, SHX, Velo, Algorand, and Quant. Those are my top holdings. And I do have some Caspa as well. Okay.
Very similar to mine, Versan. The only one I don't hold is Quant, but I think with the interoperability, Quant can work fine. They are not just stuck on Ethereum. So I will might consider adding some Quant to my portfolio.
I'm going to be honest. I'm holding it, Edo, because I bought it at a high price a long time ago, and I have to hold on to it because I never lose money. So I will wait.
Who knows? They have interoperability. Maybe they're going to make a way out of the Ethereum network. I know it's a solid project. XDC, I also hold XDC. And yes, I want to wish everyone a happy Christmas. I'm going to be spending Christmas in Vienna with my family. My father is visiting me, and that's why we're going to be heading to the airports right now. So happy holidays, everyone. We're going to see you next Monday for the turning points.
Thank you so much. Take care, everyone. Bless you all. Bye.
Thank you. Bye-bye.